Yeah, we're staying here or
going
down?
Stay here straight away, and then we'll be joined by Tim and Thorsten, and the other members of the management team are available for any questions that might concern their areas as well. And so now the question is focused, of course, on finance and capital allocation. I mean, Tim, you actually meant to sit here, but I'll do it. Okay. And let's start with Robert. Yeah.
Hi there. Yeah, it's working. Yeah, good. Yeah, Robert from Deutsche Bank. I'd like to go back to the towers question, please. I think Thorsten said you need a significant stake in the future to look after your interests. On a consolidation of towers, assuming you don't put new money in, your stake would fall. So if you're happy with a lot less than 50%, why not 0%? T-Mobile doesn't have any towers. What is it about having that stake for the long term does sort of protect your interests, given you've got a cheap stub? Thanks.
Thanks, Robert. Look, it's a combination of a few things. Number one, it's always good to have a stake in order to protect your own operations and make sure they're customer first. That's point number one. And point number two, it's a very attractive asset class. And I do believe if there is a market leader, a go-to investment, then this tower asset would be a go-to where a lot of investors have to spend their money. And then thirdly, if you have one successful platform, one team. I learn now a lot from DigitalBridge and Brookfield of how you can improve operations. If you then roll in other operations, I think that could have a significant benefit. So I believe in two things, that doesn't mean that we need to have majority or control, which we don't have right now, but we need to protect our network leadership, number one. You also see that we are obviously very flexible enough to let others on our towers to make all and everyone happy. And second, I think there is some more juice in the European tower space if the market is going to consolidate.
Thank you. And I forgot to say, please restrict yourself to one question. Now we can go around again, but so we make sure everybody gets the opportunity. Akhil next.
Hi, it's Akhil Dattani from JP Morgan. I've got a question related to the group as a whole, and Thorsten, it's linked to the comments you made around the US. If we look at the last 3-4 years, we've seen the weight of the US in the group continue to scale. We've gone from 62% of EBITDA 3-4 years ago to 68% today, as you've slightly scaled down your European assets and doubled down on the US. And if we look at the next 3 years in terms of what you articulated at the CMD, it's sort of much the same. We've got growth in the US faster. We've got M&A in the US, not M&A in Europe. And so we're likely to see the US weight of EBITDA grow above 70% and beyond. And I guess what I'm trying to understand is 3 very quick things around that. I mean, one is, to what extent should we think about this? I guess these questions come up from time to time. How do you think about it as a management team, this ongoing weight increase of the US? The second bit is, how does that tie into Tim, the comments you made yesterday about T-Mobile buybacks and increasing your stake versus your own buyback? Does this feature, is this relevant? And thirdly, obviously, you've talked about the valuation, the stub valuation being cheap. Do you think this plays a role, that you've got a growing US piece where the minorities are growing? So it's quite a broad question, but just trying to understand how, Tim and Thorsten, how you both think about that. Thanks.
Okay, I start, by the way, more with the governance question. Look, at the end of the day, we have a clear governance. We are the owner of the US. And we have a lot of rights in this company, guaranteed as well for the future. On top of that, we have a great, strong partnership with SoftBank and Masa-san and his team, which is, by the way, giving us as well, impact on these companies. We always looking for the growth and the opportunities in the US, in the interest of the US. And by the way, that's a win-win. We do not have a kind of conflict here. So therefore, the governance is not the issue. We have a clear issue. The question which you have implicitly is, are we aligned, always aligned on the way going forward, where we want to go and how we want to go? And to be honest, this is always a discussion which I have with Greece as well. You know, we don't earn more shares in Greece as well, and we have to convince our Greek management as well and our partners there. So, so far so good, went pretty well. Take an example. This fiber build out, which we are driving now in the US, is 100%, you know, aligned with our ambitions, which we are doing here. And so therefore, even it's a blueprint, which we had here in Europe, which is now somewhat used in the US. And that shows, you know, that it's more convincing people about, let's say, what is the right strategy and right thing to do. So I think from a governance rights, we are well protected. If something would happen, we are the owner of this business. And we always, you know, trying to find an alignment on the strategy for this business. And that is so far good. There are always changes in the management, have been in the past and will be in the future. But, you know, we are always behaving in the interest of the company. Usman, go ahead.
Sorry, it was just on the T-Mobile. I just wondered how you think about how we should try and rationalize the T-Mobile stake increase versus the buyback. Just how should we think about it?
But I thought Christian or Thorsten should say something as well, because, you know, I'm not the only worker here.
Look, this is why we want to keep flexibility. It's now the second time in a row that this management actually is conducting a share buyback, clearly stating that we feel that the stock valuation is absolutely too low. And if this continues to be the way, obviously there's a rationale for a DT share buyback. But if it disappears, obviously, then the other alternative, which is also a great alternative, becomes more attractive. And I think this is why we want to keep the flexibility on both sides.
As a little fact, of course, the consolidated view that you have cited impacts the EBITDA, but when you look at the earnings, which is a key KPI for us, it's about 60-40, so it's not quite as imbalanced, and that's, by the way, 2027. The other point is both share buybacks of Deutsche Telekom and not increasing our T-Mobile stake are both accretive uses of our capital. David?
Hey guys, Dave from Bank of America again. I've got two, so I've got to choose one of them here.
Go ahead.
Yeah, okay,
go ahead.
So my understanding, Christian, is your €2.5 2027 EPS, 2.5 euro cents, includes the benefits of the allocation of 15 billion. And the single most important driver of your share price historically, it's not the stub trade, it's the dividend yield, right? I think that's been proven. We broadly agree. So the dividend, the most important thing in 2027, that dividend paid on this EPS number, which has 15 billion of benefits, which you won't explain. So it's quite hard for us to understand how to get to that 2.5 euro cents when you're saying there's 15 billion, but you won't tell us what you're going to do with it. So can you give us, how do we think about that?
The simple answer, this is why we said around 2.5, because there is a difference between the share buyback in the US and the investment in the US. And it's after the dividend payouts, right? I said, so obviously we assume there's an accretion in dividend payouts given our policy. So that has all been deducted, and the leftover is the 15 billion. Okay? So, but I won't become more precise. Obviously, we have the scenarios in place if we're going 100% US or 100% share buyback, and that leads to a deviation, right? It's not a significant deviation, but there is a deviation. But we want to keep the flexibility to decide whatever is the best venue to follow.
And the decision between the two, assuming there's no industrial opportunities, and obviously TMUS has ring-fenced its own cash for that. If we think about today's share prices, and this is maybe a question as well for the rest of your management team, which side of the fence are you tipping over? Right? More DT share back or more TMUS shares?
Yeah, and it's not only a financial question, right? So,
look, David, look at what we are doing right now. 2 billion share buyback this year, 2 billion share buyback next year. We are not currently selling into the T-Mobile share buyback either. So we are doing both right now. So maybe you just work with an assumption related to this, and but we will not be deterministic on this one.
Thank you.
Next is Josh.
Thanks. It's Josh Mills here from BNP Paribas Exane. So the TMUS team yesterday made the point that whilst their financial targets are ambitious, they don't include all of the upside from the even more ambitious operational targets. And I think Claudia earlier was also mentioning that there could be additional upside in areas like AI. So my question is, how conservative is the guidance that you've been presenting to us over the last 2 days on the ex-US business? And what would be the 2 or 3 big swing factors to think about over that period, which will determine whether you end up at the low or the high end of those EBITDA ranges? Thanks.
Look, I would say it's a realistic guidance, and we always have the ambition to beat it, as we have done it over the past 2 CMDs.
Mathieu.
Mathieu Robillard from Barclays. So, Tim, in your presentation yesterday with Birgit, you highlighted the need to have a strong succession pipeline in terms of the management. So I guess you know where I'm going, and hopefully you find that a legitimate question, since your guidance today is until 2027. I think your mandate ends 2026. So maybe can you tell us, should there be a succession plan at Deutsche? Is there one? And that's a question we get asked a lot.
Look, my contract runs until 2026. And I hope that, you know, I'm coming across that I'm fully committed for the T and for the company where I'm working for 25 years. So maybe it's more difficult to get me out of the company than, you know, keeping me in the company, because, you know, I am the company to a certain extent now. That said, look, there is an end to everything, yeah, and therefore, you know, everybody is good advised, you know, to have a proper succession. There is a proper succession plan in the supervisory board with regard to my role, and a discussion on this one. By the way, there's a discussion as well for every single member. Not only for this team here, but as well for all the BLTs and for all the T3s, which you saw yesterday. And I hope that we were able to give you a little bit of impression about how talented our slate is with the ones you have seen during the days, because that was exactly the purpose of not showing always the same faces, but showing as well our young leaders here in this team. So look, Napoleon was once asked, you know, what is his trick? What is his strategy, you know, to win so many battles? And, you know, how he's looking into the future. And he said, we engage and then we will see. And by the way, that sounds very banal, but there's a lot in it. The first is the word we. It is not me, it is the team. This team is outstanding. And by the way, this team is making the difference. From Seattle to Greece, from you know, Bonn to Warsaw. The second is engage. You know, if I'm engaged and passionate like always, you know, it doesn't move the needle. You know, it needs 200,000 people to win the battle in these games. And then we will see. Is the next thing. You know, without engagement, you should not go anywhere. But then you should not become too, let's say, dependent on what's happening in the future. Look, if something is happening in this company, big style, big things, where the company needs me, I'm always around. And if there's a time, you know, when, you know, I find in the organization comes to the end that it's now time to have a new leader in this organization, I'm ready to go as well. So I think this is the good, you know, and healthy succession for this organization. And today I see myself here for the next, you know, years until 2026, fully motivated with a great team, and then we will see.
Going over to this side, Polo first, and then.
Yeah, just have a question in terms of your change in terms of leverage. So why have you decided to maintain leverage at the current level of 2.75 times? Versus previously you were guiding towards 2.25 to 2.75 times. So do you think this leverage level is high compared to your peers?
Look, several reasons. One is, obviously, as we gave the new leverage corridor, we underestimated the lease impact, as you know. We only said it's a quarter of a term. It's more 0.4 to 0.5. and therefore compare it against without leases. And the second one is we have accretive opportunities to invest into the business, and they are more accretive than deleveraging. So why should I stop the momentum of the business if we have great opportunities ahead?
Great. Usman?
Thank you. It's Usman from Berenberg. Just on your return on capital for this year, which is around 6.5. Now, I mean, you know, the German unit is generating around 8. Europe is at 9. The US, if I calculate it, is going to be around 6.5, but going up to 10, you know, over the next couple of years. So, you know, are there some costs that are not being accounted for within the units, or is something really negatively return on capital? Or
I was expecting that question. Actually, your US number is too high. In our calculation, it's below 6%, and obviously they will increase, and that makes the 6.5.
Great. Ottavio?
Actually, I'll probably follow up from this one. On your presentation, Thorsten, you said that in 2010, the emphasis of Deutsche on ROCE would have been quite significantly different from the others. And then you show the market cap of the company that's triple. But when someone looks at the ROCE of Deutsche Telekom in 2010 and the ROCE now, not in 3 years' time, it's only gone up by 150 basis points. But the market cap has done terribly better. The business with, like Christian said, with the lowest ROCE is actually the one most valuable to you, and the one that actually creates more value. So it looks that it's not probably ROCE, the one that the market is looking at, is growth. So therefore, to Christian, the question is, your 15 billion headroom, you put buyback of TMUS, buyback of Deutsche, everybody is trying to get a bit of a grasp, but it's good for EPS. Not really does anything to the structure of the company. So if you look at the company the last 12, 13 years, you've been brave enough, could sprint, even if your ROCE was very dilutive. So my question is, in those 15 billion, there is only emergency if there's something else happened, or any other things you can do it will be done on the gearing, or you will still use this 15 billion as an investment. That could be physical investment like fiber, could be M&A, if you can just clarify this 15 billion as the umbrella.
I will talk about the operational business. This guy is going to talk about M&A, which he doesn't comment ex ante. No, I think everything which is built in right now is being seen as necessary from the segments. And this is why, for example, in the ex-US business, we have increased the CapEx envelope to 8 billion in 27. So this is what is a result of an extensive discussion with the whole operational leaders. And we have nothing on the plate with regard to M&A right now. And as Thorsten said earlier on in his presentation, we'll talk about M&A if there would be one. But I think my biggest M&A is actually share buybacks and investment in the US. It's also an M&A.
I think the other point to make is, of course, the hypothesis is unproven, but our 50% planned increase in ROCE over the next 3 years will make a difference. So let's see to that. We also have 4% revenue growth, and it excludes a lot, right? You know the 30 billion that T-Mobile, for instance, hasn't committed. And I should also say that we do have retained some strategic flexibility, and therefore, if we see opportunities that are more interesting than our share buyback or buying more T-Mobile, then we also have flexibility for that. So maybe
how I see that, and maybe, you know, I understand the question is, look, this is a little bit, let's say, the price of radical transparency. We could have hidden that somewhere, you know, and saying, and by the way, suddenly we do M&A, or suddenly we do something on the remuneration, and miracle-wise, you know, we put 15 billion or whatever on the table. We want to be very transparent that we have this reserve. The second one, it is a signal of the conservatism of our plan. We want to give confidence to investors that, you know, we are able to achieve the numbers which we have laid out, which are, by the way, more ambitious than most of the players in our industry. So it shows the conservatism of the plan. The third thing is, it is as well, asking for, give us some trust. That the way how we're looking on the possibilities of doing things should follow the logic of where do we get the best bang for the buck, the best internal rate of return. This is the question which we have. And we don't say it's all going into share buybacks, and we don't say it's going all in dividends, and we don't say it's going into all in M&A. It's going that this company has a strategic flexibility to do the right things for its shareholders to be accretive. That's the way. And we will do this, as we do it with the 15 billion now, in a transparent way. It's a very mathematical and even, transparent process to say, look, the share buyback in the US, were very accretive, percentage-wise, if you look back. And it was the right thing to do, even if some of you have thought maybe the share buyback in Germany would have been the better way. I think it wasn't. It was the right decision we took. Now, the same is true for M&A. We haven't done any big M&A. I cannot recall when the last big M&A was UPC in Austria. Or maybe in the US now, some activities there. But this is the new thing, In Europe, we haven't done any kind of big things yet. So we have a lot of company money in the capex envelope on fiber. And we are very clear about what we want to do in fiber. So I do not see that we are hugely extending it, except we see that the business case is improving there. But this requires a lot of, let's say, elements. So therefore, keep it as a transparent, open issue. Trust us that we are not making bad deals. We haven't made a bad deal in the last, 10 years or 15 years. I cannot even recall, Thorsten, when you made the last bad deal. Oh, there is one. But okay, I don't remind us on this one. But this is, this is long time ago. And therefore, it is, I think it is a matter of trust which we need here.
Good. Okay, James, and then I'll come back over here.
Yes, thank you. So, Christian, I think you said the most important slide in your presentation was the one where you showed the 15 billion surplus. I think one assumption you didn't show there was what you're assuming for your kind of baseline participation in the T-Mobile share buyback. So is it to assume that you would just be participating pro rata in the kind of baseline assumption? Because if that's the case, I think you also said yesterday you wanted to get to a stake of T-Mobile in the high 50s.
Let me clarify this. Is that if we would only go for an increase in T-Mobile US shareholding, then we would end up being in the high 50s. So that's one extreme scenario, right? The other extreme would be we're staying at the 50 point, whatever we have right now, 50.5%, right? That was the other extreme. And it's that we want to keep the flexibility to basically figure out what's the right balance between share buybacks on the DTAG side and T-Mobile US shareholdings. So there's no clear target shareholding declared by us where we want to end up.
Got it. Okay, so that partly answers my question. Thank you for that. But then is the baseline assumption to get to the 15 billion surplus is you just participate pro rata to your stake?
No.
What is the assumption then, please?
We don't declare the assumption.
But that makes it, I think, a huge swing factor on how much incremental surplus you would have to then participate in, as you say, on the right-hand side of the slide, either increasing your stake or share buybacks, or, could you legally be allowed as the larger shareholder to buy directly off market from SoftBank some of their T-Mobile shares?
I think this is not the right question, I think. Participation or non-participation in the US share buyback is a function of how we want to increase our stake or not, but there are other ways of doing it. We can buy in the market. In fact, we can sell in the market, not participate in the market. We can do all of those things. We can buy from SoftBank. There's no limitations in terms of how we can execute the planned uses of surplus that we have outlined today. Okay, next, Adam.
Thank you. It's Adam from HSBC. I'm interested in whether there was a discussion about increasing the dividend payout policy in your preparation for today. And related to that, what kind of circumstances do you think would take you back down to paying out in the low end of the range, given you're in the middle at the minute?
Look, the decision is, as we've said many times, we're deciding any other year. Our track record is 50%, right? In that, so we have no indication to deviate in the one or the other direction. I think we declared a 51% based on the 175 just yesterday. And we will let you know if we come to a different conclusion in the next year. But right now, there's no indication whatsoever to basically course correct from this.
Okay. Emmett?
Yes, it's Emmett at Morgan Stanley. Just a quick question, please, on the kind of geopolitical environment that we see in Europe. So we've had a new European Commission appointed very recently, still headed up by Ms. van der Leyen, but we've seen Ms. Vestager leave the stage, and she's been replaced by Ms. Ribera of Spain. It looks like there's going to be a much bigger emphasis as well on the environment and even a tie between the environment and potential competition law. We've also seen a big paper published by Mario Draghi as well. So do you think we're now entering a new era, and what would the potential impacts be on your business in Europe?
Look, we should not expect that. You know, the whole world is changing overnight. It will be a process, and it's definitely, let's say, encouraging to see what's happening. And by the way, it is not starting only with the new commission. It started already with Macron and Scholz in Meseberg, you know, talking about the need for consolidation, the European market, for a single digital market. And as an example, they took the consolidation of our industry as a must-have. There's this discussion as well, you know, in the Draghi report, which is clearly addressing the need that, you know, aside from focusing on consumer prices, there is a need for, you know, the capability to earn the money back, you know, which is invested, and that this industry is suffering or suffered intensively. There is this white paper now for the digital infrastructure, which was prepared by the last commission, which is getting to the agenda immediately now, which is supporting our positions here. Mr. Letta, you know, has made another report which is supporting it. So I think we are getting through, as we say in German, with our messages now. Finally. Now, the question is how fast Madame Ribera is now reacting on this. By the way, she's very powerful, because in principle, she's not taking only the Vestager job, she's as well taking the digital side, you know. So she has a lot of power, and it's not a lot of compromises needed between two commissions anymore. So therefore, it's a new area. I'm looking forward to this one. And as I said yesterday, don't forget, guys, why is this industry growing? Because regulation has not gotten worse. And the industry, you know, were finding mechanisms to improve their revenues, while, let's say, the setup of the regulation, you know, stayed stable over the last years already. So I would say we have seen now the bottom, and now I'm encouraged that, you know, we've seen improvements. Maybe last comment, because it might be question your mind as well, is, look, the fair share debate is going on. The actions against Apple and Meta, you know, are on the top news every single day. So the European Commission is clearly decided to do something about this bifurcation or the remonopolization of the digital market here in Europe, because they see there will be a loss of sovereignty for European citizens if they don't act. So therefore, I'm encouraged about this one as well. I'm not a big fan of regulation, but if you can't, you know, fight the dragon, you have to ultimately even regulate them. So therefore, we are fighting for that as well, for fair share. And our discussion against Meta here, in this case, we will not stop on this one as well. And I hope that there is now a change which is materializing immediately into some legislative actions as well.
So, okay, Stefan. Oh, Andre, sorry, Andre.
Thank you, Andre from Kepler. Just going on regulation a bit more and declining that into Germany, moving forward, especially in the process of extending the spectrum rights, but also regarding the surface coverage in Germany for that to be put in place. There's requirement for sharing spectrum with 1&1, etc. How do you see, like, maybe the EU winds declining also into the German environment, and how do you see it, like, maybe moving forward? Maybe some consolidation or something around there that could happen in Germany? Thank you.
So let's talk about the German-specific pieces. I think our view is fairly public and clear on all of this. The expectation is that the BNetzA will go through with the spectrum extension. Our view on the surface coverage is we should cover places that people exist rather than the forests. And that's something that we've been debating intensively with the BNetzA. We'll see where that comes out. I think sometime in November, they will publish the next draft of their consultation. But they've been fairly clear that this whole ruling on the 2019 spectrum auction doesn't impact their view of the current frequency. We'll have to wait and see where that goes. Our view on spectrum sharing with 1&1 is we don't want to do it. We fundamentally don't understand why players who have spectrum and who are covering large numbers of existing customers should have to give it to someone with who isn't. It's not an efficient use of precious national resources to have it given to someone who has very few towers. And on the EU Commission piece and consolidation, look, I'm where Tim is. This thing will take a while to play through. Right? We've been here before on some of these conversations. I don't see the BNetzA or the Competition Commission dramatically changing their view right now, but let's see what the winds of change blowing through Europe do to that perspective. We certainly haven't heard a more bullish perspective on consolidation from either the competition regulator or BNetzA. The competition regulator in this case is more important.
Right. Tim said I didn't answer the question probably 100%. So let me clarify again. If the US is executing on their 80 billion capacity, and they would end up having a 50 billion share buyback, up to 50 billion, and they execute on that one, that would give us an extra 15 billion. If we wouldn't sell into the share buyback of the US, obviously that would we would completely utilize the 15 billion in order to increase our shareholding. So you can assume that if we balance this out between share buybacks and a higher shareholding, that we will sell partly into the share buyback in order to fund share buybacks on the DT side. So there's no extra one which is coming. Is that clear now? I hope that answers the question. At least you're nodding.
Okay, I think we are at the end of the Q&A and also at the end of the Capital Markets Day. And so before Tim has some final remarks, I wanted to do a few logistics notes. Sorry. First, thank you all for coming here and asking